Welcome to the Weekly Rate Update. I'm Craig Fuller here with John Paul Hamstead, talking about where the market's been and where it's headed. Again, and I say it every single week, it's been an interesting week.
Yeah.
It always is. I think when you're dealing with rates, it's always interesting. Let's just put that behind us.
Right.
Volumes are on fire.
Still going up.
So pumped up.
Still going up now, even with like the traditional kind of run up before Labor Day, right? We're still 7% up year over year.
7% volume numbers. But what about rates?
Rates are sideways to up, basically. I mean, if you look, there's some obscure markets like Seattle to LA that are going higher. Philadelphia to Chicago going higher. The main big lanes we think about, like LA to Dallas and Chicago to Atlanta, are essentially flat right now.
So they're flat. They're not seeing any downward pressure.
Right.
They're not seeing huge acceleration. But I think that's just a matter of time, don't you?
I do too, and I talked to a couple brokers today from Trafix, which is this big, well, they started off as a Canadian brokerage and then have expanded a lot in the past 3 years. Now they do about $300 million in gross revenue a year, and they were saying that a lot of their shipper customers as well are kind of thinking about the risk of higher spot rates in peak season.
Yeah, it's going to be, one of the things I'm also hearing is that in the 15-16 cycle when things were soft, is a lot of the shippers were pulling freight from the big asset guys and moving it into the spot market, into brokerages. It's not happening this time from what I'm understanding, is that the larger asset-based guys are actually having really strong portfolios that don't seem to be under a ton of pressure in terms of volume being pulled from them.
Yeah, I think right now shippers to date are either at budget or below budget on their transport spend.
So they have a little bit of money to play with.
They have a little bit of money to, not be as tight-fisted on the contract side. And what they're most concerned about is if there is a run-up in spot rates, they don't want to give back all the savings that they've recouped.
Yep. So what does that mean? Are you hearing your conversation with Trafix and others? Are you hearing that shippers are willing to lock in higher rates going into the peak season?
Yeah, if you're a 3PL or even an asset-based carrier as well that can make firm capacity commitments, it sounds like shippers are paying more for that.
Okay.
So, what we've been asking brokers, the past month, I guess, are you worried about spot rates coming up before shippers realize it? And if contract is still sliding, are you worried about margin compression? And what I've been hearing most recently is that they're having a lot of really productive conversations with the shippers. The shippers know that what's really most important and the biggest risk for them is that their brokers have to give freight back because they can't cover it in the fall. So it seems like the rate discussion is going well, and that even the contraction, the slide in contract may be leveling off.
Yeah, I am hearing much the same thing, is that there's no real momentum for increases in contract rates, but we're certainly not seeing significant downward pressure. I think things are probably staying stable. And I think, the larger public guys, it's probably a good environment for them because the rates in the spot market are not strong enough to see a lot of new entrants into the market. So there's not this view of 18 where a bunch of new carriers into the market. And the comps are going to get easier moving into the latter part of the year. It's going to be easier to show revenue growth and perhaps some momentum in their operating performance versus the end of last year because just the comps are getting fundamentally easier.
Yeah, and we're keeping, especially looking at Q4, we're in Q3 now, keeping our eye on the retail story, right? All of the guys, Walmart had a great beat, Target had a great beat, Nordstrom, really positive guidance going into the rest of this year. So I think that still looks pretty good.
Yeah, I think as long as consumer spending stays strong, then that will be really good for the asset-based carriers moving into the fourth quarter. Typically, retail is a game for the big box retailers and the larger retailers. It's a game for the asset guys. They're the ones that are the primary beneficiaries of large retail seasons, particularly those that are doing DC to store movements and such. And so they'll do quite well. And I think e-commerce, man, it is. That's a story, probably an evergreen story that we'll be talking about 10 years from now. Just the momentum of e-commerce. Certainly, it's an important element.
And we talk about e-commerce growth, whether it's Amazon's share of retail or whether it's the percentage of Walmart's revenues that come from e-commerce. That growth rate always accelerates into holiday seasons.
Right.
So that'll be interesting. One thing that I thought was a little bit puzzling looking at some of the volume data is that it doesn't, if you look at outbound from LAX, outbound from San Francisco, outbound from Seattle, it doesn't look like the volumes from the maritime side have really hit those markets yet. We're not seeing like a spike out of LA, for example. The volume growth on a national basis is coming from some other kind of obscure markets. It's like Houston and Jacksonville.
But I think
Evansville.
it's a couple things. One is I think you saw shippers think differently about their supply chains, where the products are coming from. Potentially are different. Vietnam is an example.
Right.
And so maybe shipping cycles and capacity is quite different. But I also think what happened in this year is where retailers and others were stocking inventory to prepare for tariffs. They just had a lot of inventory, and now we're seeing that fundamentally shift into the market. To have a surge in mid-August is unusual.
Right.
I mean, you just don't typically see that. The surges come after Labor Day. And this year has been quite different. It's an encouraging sign for moving into the fourth quarter.
Yeah, there's been a lot of really interesting movement. I think out of the ports, the major port cities, Houston and Elizabeth, New Jersey, which is the Port of New York, New Jersey market, have been strong like in the past month.
It's a sign that a lot of that East Coast volume, consumer spending is strong. What else anything else that you're hearing?
I mean, that's the main thing for, futures is flat to positive, really. Same thing with spot. We're kind of in a little bit of a lag period where we're waiting for spot to react to volume.
It's just a matter of time.
Yeah.
I mean, we're going into, here's what I think is going to happen, talking about rates. We've got Labor Day coming up.
Right.
There's always a surge in rates right before Labor Day. And I think what will happen is it's also the start of peak season for the third and fourth, the retail peak season. I think what will happen is we'll see some surge happen right before Labor Day. Those rates, while they won't be holiday spikes, they will be pretty strong. I think we'll come back into September and October and have really strong rate conditions, particularly off the West Coast for the rest of the country. We'll be pretty positive about it.
Yeah, it'll be interesting to see whether the pre-Labor Day rate spike, if we get one, how sticky it is.
I think next week is going to be really, really good for carriers. I think there's going to be a lot of spot rate activity, a lot of people moving freight right before Labor Day. I am very, very bullish about the next couple of weeks and pretty excited about where things are going to end up.
Yeah, everything that we're seeing is really positive. I don't see a reason right now to be pessimistic about the rate situation if you're a broker or a carrier.
Now, brokers need to be prepared that they're gonna, when they start bidding out and thinking about what they're buying freight for, protecting those margins, this is the name of the game. And it might be that they're gonna have to pay a little bit more than they want to secure trucks, and it might be higher risk of trucks running down. One of the things that I looked at earlier today is we're finally seeing tender rejection data show some level of increase. We're seeing spikes in tender rejection data, which is suggesting that we've got enough volume to really impact the market such that it's taken up the excess capacity.
Right, and that carriers now have a choice.
That's right. They have optionality in their freight selection. And I think as long as they're able to maintain that, we'll start to see pricing come. Pricing movements, like I said, is probably the story for next week. I think we'll see some spikes. Unfortunately, it'll be a couple weeks before we really know that data, where we're at on price. But looking forward, I'm very bullish. I'm excited.
I'm excited too, and I'm also excited just by the reports that we're getting from brokers about having constructive conversations with their customers. I was at another brokerage in town yesterday, Max Translogistics, and I asked them, I said, do you feel like over the past few years, contract rates have been sort of marked to market, like at an accelerated pace, like adjusted either up or down to match the underlying spot market faster? Is that a trend? And they're like, definitely, yes. And it's more like both parties now see that they have an interest to hold these agreements in place, and they're willing to move them up or down to adjust. And I just think it's an interesting trend about the transparency of the marketplace, the flow of information, and just the sort of collaboration that is becoming more and more valuable.
Yeah, information's never been more transparent. I mean, certainly we're a beneficiary of it, and B, a contributor of it, and I think it will continue to be the case. And I think you have to be agile in a market like this. You have to be protective of your margins. We would argue that hedging would make sense just to protect yourself, but even if you can't hedge, just be informed is more importantly. And that's the most important thing you can do in this market is be informed. And we'll hopefully do our job here each week at the weekly rate update. I'm Craig Fuller signing off with John Paul. We'll be back here every Friday to talk about what's happening in the market, where the market's headed, and likely to go. Also, don't forget to sign up for FreightWaves Live on November 12th and 13th in Chicago. We've got tons of activity with great speakers, a lot of great, wonderful demos, food, party atmosphere, LEDs. It will be electric, and we will see you there.